We are continuing the chapter. The next is adjustment number 11, interest on capital. So you give the heading adjustment 11, interest on capital. The word is familiar to you, the meaning also you know. See, what is interest on capital? Capital, you know, it is the amount invested by the owner in our firm. We are the firm. So interest is something which the firm should pay the owner, because it's like an expense for us. Us means we are the firm always, so we have to pay this interest to the owner because we are using his capital. So it's an expense for the firm or for us. So where should we write expenses? We know that it should be debited. And where will you debit? Anyways, it is not a direct expense, so we will have to take it to the debit side of P&L. Okay, so you write the heading. If it is given, if it is means if interest on capital is given inside the trial balance, you give subheading 1 if interest on capital is given inside the trial balance. Inside the trial balance means it is not an adjustment. So how many times we will record? We need to record only once in the financial statement. And what did I tell you? If you see one item inside the trial balance, you have to see to the basic nature of the item. So the basic nature is interest on capital. Just now we discussed it's an expense. It should be debited. So it's an expense. It should be debited in P&L. Understood? So what you can write as answer is to be debited in P&L, or just show one P&L account and write that particular item on the debit side to interest on capital. Only so much you need, just for you to understand where to show this item. This is the answer when it is given inside, okay, because basic nature is an expense. Now the second one, subheading B, when it is given outside the trial balance, within brackets you can write as an adjustment. Now we will have to record this particular item 2 times because it is an adjustment. So once, what's the first effect? This is the answer. First you will have to show it on the debit side of P&L. So this one you have to write once again under subhead B. Then along with that, under subhead B, you have to show the effect in balance sheet also. Where will you show this particular item in the balance sheet? It must be shown on the liability side. You have something like capital. With that, usually we will add net profit. But if you have interest on capital, that must be added first. Actually, there is no order, but it must be added with your capital. Then we can add that net profit if there is a net profit, or less net loss you can write, then less drawing. So this is how you have to write in the balance sheet. Understood? So with capital you will have to add this amount also, because that is also payable to the owner. Okay, we debited is because interest on capital is an expense for us, then we added it with the capital. So that is the double effect of interest on capital. We will work out illustration question on page number 19.38, illustration 16. Go through adjustments first. First one is closing stock. Okay, the next one is depreciate plant and machinery. So put a tick mark against plant and machinery. Allow 5% interest on capital. So you have to put a tick mark against capital. Then 400 is due for repairs. Due means it's outstanding. So put a tick mark against repairs. Then the last one, a bill receivable of 5,000 discounted with the bank on 24th March. We are doing on 31st March. So that is to be considered. It is happening during the year, but has not yet matured. The meaning is, I hope you all remember the meaning of bill discounting. That means first you would have sold some goods on credit basis to a customer. I mean, suppose the customer's name is Rahul. We sold goods to Rahul on credit. Immediately are we getting the amount? No, it is on credit. So Rahul is giving us a bill mentioning the amount of the bill and the date on which he will be making the payment. Anyways, he is not making the payment today, right now. He may make the payment on some time, like it is after 2 weeks, depending upon the agreement between the firm and the customer. Okay, suppose he agreed to pay the amount after 2 weeks. Now, during this time period, during these 2 weeks, suppose you need this particular money, this amount you need. But can we go and ask Rahul? No, he will not make the payment because the agreed date is after 2 weeks. So, what we can do in this situation is bill discounting. You can take this particular bill to the bank and the bank will give us an amount after taking some bank charges, some discount charges they will take. Suppose the bill amount is 10,000, entire 10,000 you may not get. They will deduct something like 200 or 100, their bank charges they will take, the balance will be getting. Okay. Now, on the date of payment, on the date of maturity, maturity means the due date or the date of payment, who will make the payment to the bank? Rahul should make, isn't it? We are the middleman, the firm is the middleman between Rahul and the bank. We got the amount, but actually on the date of maturity, Rahul should give us the amount. So, Rahul will make the payment directly to the bank. That is how the transaction is going to happen. But now, in case if Rahul doesn't make the payment, what will happen? He is not having amount, he failed to make the payment. Now, whose liability is there, or who has the liability to make the payment? We have the liability. The firm is having the liability because we have taken amount from the bank. Understood? So, it is becoming our firm's liability to make the payment if Rahul fails to make the payment. That is the situation. This is called a contingent liability. I mean, this situation is actually bill discounting. Okay, bill is being given to bank, you are giving or you are taking some amount from the bank after deducting some discount charges. That's called bill discounting. Now, there is a topic like contingent liability that you can write. I mean, after this interest on capital, you can write it there. It is not an adjustment. The term you must understand, contingent liability, contingent, the spelling I will write, it is, the spelling is actually contingent, but you have to pronounce it as contingent liability. There is N here in the spelling, but it's silent, so it's contingent liability. The meaning is, it may or may not become a liability depending upon the happening of an event. The same example we will take. If Rahul doesn't make the payment, your firm is having a liability to pay. If Rahul makes the payment, we don't have any liability. Understood? So, it may become or may not become a liability depending upon happening of an event. Here, what is the event? Whether Rahul makes the payment or not. Understood? Such liabilities are known as contingent liability. We can't show this liability in the balance sheet because as of now, it is not considered as a liability. It has not become a liability. In future, it may become, it may not become a liability. Everything happens on the event. So, that meaning you have to write this example also you must write, otherwise you will forget what is contingent liability. The meaning simply, if you read, if you will not understand the meaning. So, write the example also with that meaning. Okay. Yes. So, where will you show this contingent liability? It can't be shown inside the balance sheet. After you finish the balance sheet, outside the balance sheet, that means after the balance sheet, you can write it as a sentence. Like you have a liability here, no? That fifth adjustment is what I am discussing. Bill receivable 5,000. You have discounted with the bank, not yet matured. On the maturity date, sometimes it become liability, sometimes it will not become a liability. So, you can write, if you see the solution, they have written one not there. That's a contingent liability they have written. There is a contingent liability of 5,000 for bills receivable, discounted with the bank, not yet matured. The question itself they have written as sentence. So, anyways, we can't write it inside the balance sheet. It must be shown as a working note like this, since it is a contingent liability. Okay, now we will start the financial statement, and this particular item must come after the balance sheet. So you give the heading. You write column headings, particulars amount, particulars amount. Now we will start with opening stock. It is 20,000. Then purchases, see whether you have any returns. Yes, here we have returns inward, returns outward and all that you have to write very carefully. Returns outward, or it is known as purchases return. So you write purchases value in the inner column. To purchases it is 1,05,000 less returns outward, that is a term used in the question. So returns outward it is 5,000. So we can write in the outer column 1 lakh. Then we have to write all direct expenses. We have first one, wages. Always move in the order given in the question. 50,000. Then repairs is indirect, rent is indirect, manufacturing expenses direct, whereas trade expenses indirect. So this is direct. The amount is 8,000. Then we have carriage. Simply carriage means it is direct, it is carriage inwards, 1,500. Then the last one, fuel and power, that is again direct expense. So which we will write here 1,000. Now on the credit side, by sales it is 1,64,000 less returns inward or sales return, it is 3,000. Write less items within brackets always. It is 3,000 only, 1 lakh, so it will be 1,61,000. Yes. Then there is closing stock. Closing stock you take from the adjustment 14,500. Yes. So the trading account is over. Now you compute the balancing figure. It will be either a gross profit or a gross loss. Here it is a gross loss. So write by gross loss, carry down, it is 5,000. Write the totals and you can close this. 1,80,500. Okay, this is gross loss, so we will take to the opposite side. To gross loss brought down 5,000. Write all indirect expenses. First we have repairs. Repairs is having an adjustment. So in a column you must write the amount. Add repairs due means outstanding amount is there. That is 400. Then you have trade expenses that we discussed already. It is an indirect expense. The amount is, did we miss rent? Yeah, rent also you have to write. You write in that order itself. So to rent. Why I am asking you to follow the order is so that you won't miss out any item. Actually, you can write rent after trade expense. Answer will be correct. No, nothing will happen. You will not lose any marks. But you might forget to write that item if you don't follow the order. So that's the only reason. Then to rent. The next one is we have bad debts. So bad debts not having any adjustment. So directly you can write it in the outer column, and this is existing bad debts. Don't write it in the balance sheet and all. Once only you need to write this. Existing bad debts, it's a loss. It will be debited in P&L. Carriage, fuel and power, all those we recorded in trading. Now read the additional information. Closing stock we recorded. Okay, depreciation we have to record. Yes. So next we will record to depreciation on plant and machinery, and here the depreciation amount is directly given 4,000. Okay. Then the next one is interest on capital that we discussed. It should be shown on the debit side of P&L, later on the liability side of the balance sheet you have to add with capital. So here also you have to write 5% on capital. Capital is 1 lakh. So it is 1 lakh into 5 by 100, 5,000 is your interest on capital. Then due for repairs we took. Okay, the last one is a contingent liability. So now your trading and P&L is over. Nothing on the credit side. That means of course shortage is on the credit side, and it is a net loss transferred to capital account. 27,900. The total is again the same because nothing is there on the credit side. Now what we have to discuss is just read adjustment 2 once again. Depreciate plant and machinery by rupees 4,000. That prefix is important. You have to consider that very carefully. Depreciate plant and machinery by rupees 4,000. Suppose your adjustment was depreciate plant and machinery to rupees or at rupees. What is plant and machinery's value in the question? It is 40,000 at rupees 50,000. So here, in this question, this is the adjustment given. Plant and machinery by rupees 4,000. Whenever the prefix is by, you just have to take the same amount and record. We recorded on the debit side of P&L to depreciation, that 4,000 we recorded directly. So if the prefix is by, prefix means what is given before this amount. If it is written by, you can directly take the amount and write in P&L, and the same you can deduct from the balance sheet. Okay. So same figure you can take if the prefix is by. But if the prefix is to or at, what you have to do is, you have to compare this figure, adjustment figure, and what is given inside the trial balance. In this question, plant and machinery's value is 40,000. Here it is 50,000. And what you have to take is, if the prefix is to or at, you have to take the difference between 50 and 40. Understood? That means here we will take a lesser value since it is depreciation. It's 40 given, so we will take it as 30. Okay, since it is depreciation, it will go down now. Okay, so if it is 30, directly don't write 30 in the debit side of P&L. It's not like this question. If it is to or at, you have to compute the difference. 40 and 30, the difference is 10. That 10,000 you must show on the debit side of P&L. Later in the balance sheet also, deduct 10,000 from plant and machinery's value. Understood? So if it is to or at, always remember, take the difference. If it is by, take the same amount. That also you must remember. Next is the balance sheet. So, balance sheet as at liabilities amount, assets amount, we will start with capital. Here the capital amount is 1 lakh. In your textbook they have followed liquidity order, both are fine. Now with capital usually we will add add drawings, add net profit less drawings, or less net loss less drawings. Here we have one more item, that is interest on capital, which you must remember that we have computed already 5,000. Then you add net profit if it is a net profit, but here it is a net loss. So, you deduct that, less net loss 27,900, right within brackets, and less one more item, that is drawings 10,000. Final figure you write in the outer column 67,100. Then we will go through trial balance items, record all other liabilities, not expense, all other liabilities. Since we do not have any other non-current liability, we will start with creditors 12,000. Then we have bills payable, it is 5,000. Okay, with that trial balance items are over. You have to go through adjustments now. There is something like repairs outstanding, which you must write here. So, go through adjustments once you finish trial balance items. Repairs outstanding is 400. Now, on the asset side we have plant and machinery, and it is having an adjustment. So, we will write less depreciation. Plant and machinery is 40,000. Since here the prefix is by, no need to do anything, directly take that value 4,000 and deduct it. We do not have any other fixed assets. Next we will write closing stock, take from adjustment, that is 14,500. Then we have debtors 24,000, sundry debtors we have 24,000. Then we have bank, the amount is 10,000. Just go through adjustment items, closing stock, depreciation, interest on capital, due for repairs. The last one we will write after the balance sheet. So, items are over. We have recorded all items. At the balance sheet, total is 84,500. Below this you have to write one note, that is the contingent liability. Since it is not a liability now, we will show it outside the balance sheet, like you write there is a contingent liability on bill discounted for rupees 5,000, which is not yet matured. So, this particular sentence you must write after your balance sheet as a note. That is how you have to record contingent liability. So, that contingent liability meaning effect of interest on capital, and that prefix like by or to or at, that also you have to learn in this question.